Hello, so my name is Sana Ahmad, and I currently was assigned to a case summary about, a little bit about T accounts and where there may have been mistakes as far as financial forecasting and how to really process, inventory and goods and services. So, after looking at the summary, I found some key fundamentals that were incorrect and that could be easily avoided with alternative methods. So let's move forward to, just kind of a little bit about what happened. So there was missing inventory, due to having wrong estimates. The cost of goods and services were incorrect as far as, what was the assumptions of, from the engineering teams of, what production as well as what inventory goods will be purchased in the future. This should only be, influenced by reliable data. It should not be just an estimate, as it can seriously damage or further cause error in down the line, especially with finances, with the product itself. So, errors on estimates actually can be calculated. So that's something else that was amiss was it was incorrectly calculated, and there are ways where you can make margins of errors to ensure that if you guys do go over or under the estimate mark, once you get the actual result or actual data, you already have that set up. So, also recording properly within the T accounts and journal summaries as well, being able to properly record, year by year, and being able to look at the past archives is also something that'll be very advantageous. So, essentially, there was missing inventory and it was not recorded properly. So, let's go into, the cost of goods and the inventory relation. So, as you can see, on the very right, I made my own T account. Let me go ahead and move my screen a little bit, and you can see, the debit and credits as far as cash, finished goods in the inventory, cost of, the COGS or cost of the opening inventory, the purchase, and the minus the closing inventory. So the cost of goods, and then raw material as well. As you can see, to calculate the cost of goods services, really does determine the balance in inventory. You use opening inventory plus purchasing, and then you subtract the closing inventory. So that's my T account to the right, and then to my left, you can see that I put in a journal entry for the following material costs. So in the journal entry, this is what should be listed as far as what you're looking for and what should be properly recorded for the goods in the inventory. Moving forward, with the T account. So, it was a major miss. The amount of 350,000 was in missing inventory and needs to be adjusted and written off. So, the write-off expense is 350,000 of debit and credit and to write it off. And as you can see it to my T account to my right, you can see, where I've, went ahead and put in the work in process, accounted for the finished goods accounted for as well, and then cost of goods services. I also made T accounts to show, kind of the credit and debit as well. After doing the calculations and everything, it was much more than the pounds that were for consumption for the products to be made or manufactured for the refrigerators. So therefore, the cost of goods and services debit is 350K. So things that we should look at as far as alternative methods is, we should be looking at, making sure this mistake doesn't happen again, as this was a pretty critical miss. We want to make sure, as far as the person responsible, is that we do a review and audit of the estimates that were made from the raw materials itself. We want to make sure that you're recording it, making archives of it. Another thing that we want to do is avoid any forecasting errors. So being sure that you also reference or at least partner with maybe third parties that are able to estimate accurately of what exactly you need. There are people out there that, specialize in this, and that could be advantageous for the company investing into this, because further down the line, they won't have a miss like this. Where they're out of 350K. Another thing that we also do is any materials used for production should be at least labeled or recorded or accounted for. So it should be a work in process. So that could really, really alleviate and help, the team know where exactly the money is going and how much is to be expected.